It's July, and we got another market update for you here in the Austin metro area. I'm David Shapiro with my colleague Lee Abraham. We have over 50 years of real estate experience investing as real estate agents, appraisers, as executives at brokerages. So, a lot here to talk about. Before we get off today's video, what we want to do is let you know if you're thinking about selling, how should you price your home to be ahead of the market instead of caught scrambling from behind? So let's start by diving into some of the statistics. Here we can look at the number of active listings, and peaking here, the highest number we've seen in a couple of years at 3,300 active listings within the city limits. And down here you can see we're looking at single family homes just within Austin. Later on, we'll talk about the suburbs, but for now we're going to talk about the city limits. And if we look back to last July, here at the bottom you can see we were at 2,600 listings, and it peaked in August. So, we're probably, if the thing stays the same, we're probably coming into the peak of the number of active listings here soon.
So, David, 3,372 active listings can be viewed from a variety of metrics regarding the number of sales per month. Now, as we look at the last 30 days of pending sales, a fairly robust pace, 769 pending sales over the last 30 days. We divide that number into our 3,372 active listings, we're looking at just over a 4.38 month housing inventory. You can see the 1 month of closed sales, only 628 closed sales in the past month. That translates into a full month higher of monthly housing inventory, about 5.5. So when we take a look at all the numbers and try to reconcile the data, we're moving towards a balanced market, which is generally considered to be a 6-month housing inventory. Still a seller's market, just doesn't feel that way because of where we've been with the historically strong seller's market back a couple years ago, and now as we get into the new normal.
And just keep in mind, it is hyper local, right? So we're talking about the whole city, but every neighborhood is responding differently right now. And even though some neighborhoods, houses have been sitting on the market a long time, other homes are getting multiple offers in different neighborhoods at different price points. And so here you can look at that 30-day monthly housing inventory over time. And so here we're at 4.4 months of inventory compared to last July, about a month higher. So this tends to peak in the winter. It's peaking a little bit sooner here in the summer, when it tends to be a little bit of a stronger seller's market. And, we'll show you exactly why that's happening here as we continue to go through the slides.
Number of sales per month. So this is the most dramatic statistic in our monthly report this month. Big drop. And we weren't quite expecting the size of that drop. We're down 29.3% year over year, and about the same month to month, 28%. Just over 600 sales. Now, the caveat is that we're recording on July 3rd. These numbers will go up as more closed sales are entered into the system. But still, it's a significant drop. We're really going to be taking a careful look going forward as what the July numbers look like. Traditionally, we're going to look for stronger sales here in the summer, and that's really going to be the story as we go through the rest of this quarter, try to make sense of what's going to happen for the balance of the year.
And I'll point out, this 628 sales in the month of June, which, as data comes in, maybe it gets up to 700, is about a 45% drop over what we would consider the norm back in 2019. Of course, 2020 and 2021 were outliers, and although this number is pretty consistent, the June number of sales, for whatever reason, but always looking back to 2019 when we can. So about 45% less sales, the number of sales, than there were back in June of 2019. So that is really significant. We've seen this number fluctuating, generally in like the 30% range down. And so seeing that increase is, I guess, not all that surprising with interest rates, but what we had heard is that spring selling season, things would start to pick up, which they did a little bit. But once we got into the summer here, it's really slowing back down again. And as we continue to talk about the other stats, the one that's very surprising, average sales price holding up really well. We are now only down about 7%, which is what we were basically last month since we're almost unchanged from last month. It's down 7% from the all-time high in May of 2022. A little bit different than outside the city limits, which we will get to here in a minute. But really showing stability in pricing. And so what that's telling us between these two statistics, between the number of sales and the average sales price, is that sellers, they're just not going to sell for, they don't have to, for some very low amount in their mind. They have this reference point. Here's what my home was worth in early 2022 or in 2021. I don't really want to sell for all that much less than that. I'm just going to wait it out. And what's different in 2024 than 2008, the last housing crash, was in 2008, people were losing their jobs and they had adjustable rate mortgages. For the most part, anybody who wants a job right now could have a job. Unemployment is extremely low. And most people, not everybody, but most people got a fixed rate mortgage. So they don't have to worry about their payment adjusting and changing really rapidly. So people can just wait this out and, wait until prices rebound and they can get the price that they want for their home. Now, there are people that they had a divorce or they had a kid in their family. There's something that happened. They have to sell. And those are a lot of the sales that we are seeing. Or maybe somebody that has cash. They're just like, okay, I'm going to turn my house into a rental and I'm going to go buy my next home in cash. So those are some of the reasons why people are still buying. All right, Lee, you want to talk about days to sell?
Days to sell, we have matching statistics year over year and month to month, both up 7.7%. Marginal, actually, in the greater scheme of things, whether it's 39 days or 42 days. But the main takeaway here is, as a fundamental, it's a sign of a softening market, if you will. And so that glacial speed movement towards a balanced market is reflected in these days to sell numbers going up just a little bit, and we'll be keeping an eye on that along with the other indicators.
And the number of new listings down almost 10% year over year and down 16% month to month. And so, I think sellers realize that, okay, I'm maybe not going to get exactly what I want. And so they're opting out of even listing their home. So the number of listings is down. Again, this is, different from 2008 where people had to sell, right? People can opt out of selling. And so the number of listings are down, and which is keeping that monthly housing inventory actually a little bit better than it might otherwise be. If we had the same number of listings as we did a year ago, then the monthly housing inventory would actually be even higher than the 5-ish months that it is right now.
David, one of the things that is fascinating about the Austin market is how much synchronicity there's been between the number of sales and the number of listings. We haven't seen one moving dramatically away from the other. When one goes up, the other goes up. When one goes down, the other has similarly been going down. And that's the case here. Number of sales, number of new listings, both moving in a downward direction. That is the ultimate visibility for a stable market. It's the other sort of trend where you have rapid change in a marketplace. For example, if the number of new listings was going up 30% month over month and year over year every month, the number of sales was going down similarly, you'd see a gap that creates what basically we had with the great financial crisis that you were referencing earlier. So to me, having been looking at numbers for a long time, I just find it very interesting that the Austin market seems to self-adjust very nicely, which is a healthy sign for us going forward.
And the sales price to list price ratio, pretty much flat. So not much to say here. And I believe, Lee, this is the last list price. So this is the list price when it went under contract. Is that right?
Correct.
Yeah. And then our famous listing inventory barometer. So the most up-to-date you can get in terms of tracking what's going on in the market, so you know what to do as a seller or as a buyer. And the number of new listings in the last week, 271, 187 pending sales for a ratio of 145%. And Lee, anything on this you want to point out?
I think that when we just look at the trends for the new listings from, let's say May 12th going forward, 337, 315, generally moving in a downward direction to a low of 271 for the past week. The number of sales, however, have been much more stable of a number. A smaller number, but a little more stable. I think that's interesting. I'd like to see the number of pending sales really go up and translate into closed sales. But again, getting to my point earlier, we don't have the problem of these things moving in different directions. One is stable, the other is moving towards balance.
Yeah. And, I've heard some different numbers thrown around on other calls I've been on. And so just to be clear, we are closing about 150 deals a week, right? You can see the number of pendings fluctuate, but with 630, let's call it 700 by the end of the month, that's over 150 closed deals a week within the city limits. And this is just single family. So there's some additional deals that'll close with condos. So keep that in mind that there are deals closing every day, every business day within the city limits and the whole metro. All right, let's take a look at mortgage rates. Pretty stable over the previous 4 weeks and, 1 week, and it hasn't changed all that much from even a year ago. Lee, anything you want to add here?
Just as we're recording with the unknowns of the future, so you've got the presidential election looming large, you have what the Fed is going to do, and the optimism that remains with the Fed funds rate, I think, is a very key element to the psyche of the market, and that remains intact. In other words, the potential for a rate reduction remains very real, and I think that's the story here. And when that changes one way or the other, the market's going to shift accordingly.
Yeah. One thing I'll point out is that the UK hit the magic 2% inflation mark. And so the expectation would have been that they would lower interest rates, but their equivalent of the FOMC met and decided they were going to hold interest rates the same. They really want to make sure that they have killed inflation. And so that risk of it happening here is also possible, that we hit 2% inflation and that they still decide to hold rates where they are. So there's no guarantee that they're going to drop them right away. So just keep that in mind with your planning. We really don't know what's going to happen. The election, they say that the Fed is supposed to be independent of what the president and the other politicians do and say. So, will that impact what the Fed is able to do? Who knows? So, all right, moving on. Let's talk about what's happening outside the city limits. So the suburbs, we're talking to the north, Leanders, Cedar Park, Round Rock, to the south, Kyle, Buda, and other towns, right? It's actually a way bigger area that we're talking about when we're talking about outside the city limits. Geography, population, probably pretty close, but number of active listings and housing significantly more. So population outside is probably a little bit more than inside the city limits, depending on what area you're looking at. All right, so we got 9,500 active listings, so significantly more. We got 2,200 pendings in the last 30 days. 1 month, we had 1,800 closed sales. And so we're looking at a inventory of 4.3 to 5.08 months, depending on how you look at it.
Number of sales per month, David, same basic story as in town. They're down. And in context of the other numbers, we'll see that it's in alignment with what we've seen in town, a general softening, but at least the primary, supply-demand numbers are moving in the right direction for stability. We'll track this again. We're hoping to see more sales, and I think we will for the month of July when we're doing our report next month.
I'd say the big difference between these two is how far we're down we'll just talk about month over month and year over year. We're down 3.1% year over year, up 0.6% month to month. But I really like to compare going back to the all-time high, which was last June, and we're down 80K. And to compare that to, we're only down 65K within the city limits from a higher average. So outside the city limits, this is a 14%. We're still down from the all-time high. And in the city, we're only down 7%. So the city's holding up better in the tough times, as we've talked about many times before. Tends to do a little bit better in the good times, hold up in the bad times. And so something to keep in mind. For some people, this could be a buying opportunity to go outside of the city limits. And that's what we've been seeing people do as things have gotten more expensive. They've pushed to further from downtown. There is a saying I've heard, drive until you can afford it. And that's what people have been doing with higher interest rates. And, I imagine that with lower rates and people being able to afford more, there's going to be more demand for within the city too. But the whole area is still continuing to grow. We still have a lot of jobs here, and the overall sentiment is very positive for the Austin area.
Days on market down just a bit year over year, up a little bit month to month. Essentially, you take a look at that, it's relatively stable, clustering around 60, significantly higher than in town. That's to be expected, and really no news here.
Number of new listings up year over year, down quite a bit month to month. And so kind of similar trend to within the city where listings are also down as well as sales.
And then the sale price, list price ratio, again, another fundamental indicator that's showing a little bit of a softening. This has been remarkably stable metric as we track market sentiment. And I think this is accurately showing a little bit of a softer demand dynamic for the month of June 2024.
So now that we've gone through all that, we'll talk a little bit about, all right, if you're a seller, how should you be pricing your home? So what we're seeing, as Lee just mentioned, is softening. And what you don't want to do is start high and then chase the market down. So what we recommend, if you're thinking about selling, is that you price a little bit on the aggressive side. Aggressive meaning probably a little bit lower than you might think you need to list the property, and really get as many eyeballs on that property as possible. What we're seeing with properties that are listed too high, they're not even getting traction, no showings, because buyers are just looking at it going like, nah, they're not realistic. I'm not paying that much for that house. And so if you are listing your home high and you are seeing that, that's why. So you need to drop the price, get it below where you think it needs to be, not by much, a couple percentage points at max, and really entice people to get in there and look at it. And don't be the one that's chasing the market down if you need to sell in the next couple months, right? Because we don't see this improving in the next couple months. Now, if you have a longer time horizon and you're like, oh, I can wait this out through till the next spring, that's a totally different story, right? Then you don't need to list. You can wait it out. It's hard to imagine that things are going to get better between now and the holidays. And then once we hit November, we get to Thanksgiving, things really tend to slow down between Thanksgiving and the end of the year. So really the next really solid time to sell your home, if you have the luxury of waiting, is going to be the next spring. Things tend to pick up pretty quickly in the second week of January and then furthermore into the year. But anytime after that first week of January is probably going to be your next best bet. Now, if you're a buyer, right, this is the time between now and the end of the year where there's a buying opportunity. And I think it's the best time to buy. I was spending some time with a local investor who has a $15 million portfolio, and he's continually to invest and buy properties here in the Austin area. He's so bullish that he's willing to take on properties where he's losing money every month, where the rent does not cover the mortgage. So there's a lot of very smart people who are very positive and optimistic about this being a buying opportunity, and things are going to improve, including myself, next year and the year after for sure. So if you are a buyer or you've even thinking of buying in the next year or two, I would say now is a really good opportunity, and reach out to us so we can talk to you about it. If it doesn't seem like it's a good fit for you to buy right now, we'll be happy to tell you that. But I know me personally, I'm making offers on seller finance homes because people are eager to sell at a good price, and I could pay a little bit of a premium over today's market price to get a way better interest rate, 5% in many cases, with good terms. And so I really think that there's some opportunities out there, but you're not going to know unless you reach out and have a conversation with us. So go down to the bottom, schedule a call with Lee directly, or shoot us an email, give us a call, whatever works best for you. And if you got a lot of this video, please share it with a friend, give it a like, and go ahead and subscribe so you can get updated for our next video next month. Thank you for joining us, and we look forward to talking to you soon.
Thanks, everybody.